I backtested SPX 0DTE trading for over 200 days, risking around $300 to $400 per trade. And what I found completely changed how I look at trading. Because at first glance, this looks like a perfect system. High win rate, steady profits, consistent equity curve. But when you actually go deeper, you realize something most traders completely miss. And the reason this matters is simple. Most traders get obsessed with winning trades. But in reality, one bad trade usually defines your week, not 10 good ones. And that's the part nobody focuses on. In this video, I'm going to break down the real performance of an SPX 0DTE strategy using credit spreads and iron condors. No hype, no predictions, just real data from over 200 trading days, and more importantly, what that data actually means in real trading. Because backtests can look amazing and still fail traders in live markets. So let's go step by step. The strategy is simple. Every trade uses defined risk. We collect around $100 to $150 in premium, while risking about $300 to $400. So right away, you're not trying to predict direction, you're trading probabilities. Most of the time, the market behaves normally, it stays in a range, moves slowly, and you collect premium. But sometimes, it suddenly breaks structure, and when that happens, that's where losses come from. So this strategy is basically saying, I will win small most of the time, but I must survive when the rare loss happens. And this is where most beginners misunderstand it. They think, if I just win more often, I'll be profitable. But that's not how it works. You don't control how often the market pays you, you only control how you behave when it doesn't. Now here's what the data shows. Over 200 plus trading days, the win rate stayed between 80 and 87%. Total profit was around $6,000 plus, with a slowly rising equity curve. On paper, this looks extremely strong, but here's what most traders don't understand. A good-looking backtest doesn't always mean easy trading, because numbers show outcomes, but they don't show emotions. And this is exactly why two traders can use the same system and get completely different results. One follows it strictly, the other overthinks every trade. Same strategy, different execution. Because here's what the win rate doesn't show you. The average winning trade is around $100, but the average losing trade is over $300. So one loss can wipe out multiple wins. And this is where most traders get trapped. They focus on how often they win, instead of how badly they lose when they're wrong, and that difference decides everything. Because if you make small, consistent profits, but don't protect yourself during losses, you don't actually have an edge. You just have a lucky streak. And luck eventually runs out. That's why risk matters more than win rate. At one point, this strategy went into a drawdown of over $1,400, and this is where most traders break. But here's the truth. Drawdown is not the problem. It's how you react to it. Because drawdown will always happen, even in good systems. The real issue is behavior. You start second-guessing, you reduce size, you skip trades, you change rules. And once that happens, you are no longer trading the system, you are trading emotions, and this is the part nobody likes to admit. Most trading losses don't come from bad strategies, they come from breaking your own rules. That's where accounts slowly bleed. So what is the actual edge here? It's not prediction, it's not timing, it's structure, it's risk control, and repetition. Because in the long run, and you don't need to be right all the time, you just need to survive losses and stay consistent. And this is where trading becomes simple, but not easy. Simple means you know exactly what to do, but not easy means you have to do it the same way. Even when it feels uncomfortable, even when results are slow, even when losses happen. And that repetition is what creates consistency over time. The reality is, this type of strategy is not exciting. There are no big wins, no emotional highs, just small gains, repeated over and over again, and occasional losses that feel uncomfortable. This is why most people quit. They expect excitement, but trading is repetition. Same setups, same rules, same execution. And if you can't handle that boredom, you won't last long enough to see consistency. If you want to see how these trades are structured in real time, I share every setup inside our Discord, entries, risk, and full breakdowns as trades happen. So instead of guessing, you actually see how decisions are made. Link is in the description, and in the next video, I'll break down real live trades step by step. See you there.